What's up, Bat family? Welcome back to the Build a Trader YouTube channel. Hope you all had a wonderful trading week. In this video, we'll be going over our weekly analysis and covering the major economic news events for the upcoming trading week. Last week was a fantastic week. Gold made a new all-time high. It followed in line with our previous weekly analysis. Not only that, we happen to call gold as a buy signal in the free community, in the free BAT signals community. Links in the description if you aren't already there. So we happen to catch a 400 to 450 pip move on gold, anticipating those new all-time highs. Now, we didn't hold all the way to the all-time high, but we did hold to 28.50, and that's what we were looking at. On top of that, we also happen to call a signal on silver. Silver also had a fantastic week and was in line with our weekly analysis from the previous week. Overall, prices went to above $32 for silver, which we'll cover here in the analysis shortly. And real quick, before we dive into the news, go ahead and follow me on Instagram, X, and TikTok. Please like and subscribe. And if you haven't already joined my free Telegram channel, link is in the video description. It's literally free. I'm out here doing this just as a passion project and ultimately try to help as many people as I can for free, as well as a low-cost mentoring service. If you want more information on that, go ahead and join my free Telegram channel and send me a direct message or message me on any of my socials. Without further ado, let's go ahead and dive into the weekly economic news. Start the week off Monday open. Sunday, we have no news whatsoever. On Monday, we have, during New York Open, medium impact news for the Euro, which is European Central Bank. President Lagarde is speaking. On Tuesday, we have high impact news for the GBP, for the Great British Pound. Bank of England Governor Bailey is speaking, and this would be during the London-New York crossover, about an hour or so before pre-New York session. Following that news event, we have Federal Chair Jerome Powell testifies at 7 a.m., so 30 minutes into New York session open. High impact news for the US dollar on Tuesday. Wednesday, pre-New York, we have core CPI, core consumer price index. And for those that are curious, core consumer price index does not include food and energy data. That's the only difference. The CPI itself contains food and energy prices. The core CPI does not include that data as it's more volatile. Just for those that wanted to know. Shortly after that, we have Jerome Powell speaking once again, 7 a.m. 30 minutes after that, 7:30 a.m. here Pacific Standard Time, 10:30 a.m. Eastern, we have crude oil inventories, which is a medium impact news event for the US dollar. Later that afternoon, shortly after market close, we have FOMC member Waller speaking. During Asia session, we have high impact news for the New Zealand dollar. We have inflation expectations. Later that evening, pre-London Open, we have Great British Pound, GDP, GBP, Gross Domestic Product, high impact news pre-London Open for the GBP, and also releasing preliminary GDP quarter-on-quarter data as well, which is a medium impact news event. Following that, we have consumer price index for the Swiss franc in Switzerland 30 minutes before London Open. So high impact news for Swiss franc. Thursday, pre-New York Open. Yeah, this is a busy week so far. I mean, Tuesday through Thursday, well, through the whole week, Tuesday through Friday, is just tons of news. But Thursday, New York Open, pre-New York Open, core producer price index and producer price index for the US dollar, as well as unemployment claims, all high impact news. And Friday, to end the week, pre-New York Open, 5:30 a.m., we have core retail sales and retail sales for the US dollar, both high impact news events. So as you can see, this week is going to be a pretty fruitful week with lots of news events, lots of opportunities. Just have to manage your risk and be mindful of the news events going on at that time. But overall, this is going to be an exciting week, and looking forward to see what the market provides. First things first, like usual, we're going to start with gold. And as you can see on the gold chart, we had a very nice run up from this week. On the right hand side, we'll start with the weekly chart. You can see that this low right here was our previous week's low, where this wick is, so we'll move this previous week's low up to here now, since this is where it's at. Right here, we had a major low of 27.72 last week to start the week off. Then from there, we absolutely rocketed up to $2,886, nearly $28.87 per ounce of gold. So as you can see, that's a new all-time high. We're going to copy this, not that, but copy this previous ATH resistance here, move it up to our new area. This is the all-time high now, and here is just previous resistance turned to support. So we'll keep that as a key level. Previous week's high, let's go ahead and move this zone to where it needs to go, right here. Because this is our previous week's high as well as the all-time high. Let's remove this zone here as we no longer need it. These green zones were our Fibonacci extension levels that we've been looking at for the past months. As you can see, it finally played out. So for those who've been using that method to kind of see where the market can go during the week and during the month and the overall higher time frame trend, this is a perfect example of how it plays out. It just took time, took patience. We're going to remove this zone as well, that's no longer needed, and let's see, what else do we need here? Let's remove this, we no longer need that. Remove the risk reward tools. Okay, clean chart. Right here in this zone, we're going to move it to this particular area, as this seems to be an area of major demand. And price may actually potentially come down to that point this week. We'll see. Right hand side, we'll be putting on the Fibonacci retracement tool just to get an idea of what could happen this week. So let's go ahead and refine this from the low to the high. As you can see, last week's low all the way up to previous week's high. So what do we see here? We have some confluence down here at the 28.15, 28.10 price range where the zone is. So I'm going to set an alert down here as this is an area of interest and could be a potential entry area, potential buy zone. Next, we have this area here, which is our current area of demand where price is currently at. So 28.50, 28.40 price range. We can see lots of rejection here. This price basically broke out, retested, tried to continue, failed to make a new high, and it kind of looks like it's either going to form a higher low here or give us a steeper pullback and then continue its momentum up to the 2900 price range. But first, let's go ahead and adjust our zones here. We're going to zoom out a bit to the 12-hour time frame on the left just to see a bit of a higher time frame perspective. We have a minor area of support right here at 28.50 price range. So that's actually around 28.55, so we'll keep it there. All right, excellent. Let's zoom into the 4-hour time frame so we can see price is kind of reacting from this point now, or last week before the market closed, and it almost looks like we may get some more bullish pressure and just keep climbing from here, right? But if this area does not hold and we just get a rejection from this point and it pushes bearish, then we can see this area where we have support at the 28.40, 28.30 price range. Could get a pullback there and then a continuation up to 29.17, up to this green zone here. This was in line with our overall higher time frame extension level, but as you can see, it lines up with the weekly one we just applied on the right hand side. So next week's targets could potentially extend up to 29.17, maybe even 29.40, but we're first looking at 2900. 2900 does appear to be on the books, and potentially up to 29.20 price range, and maybe even 20.40 if there's enough momentum. Similar to last week, price extended further than 28.50, went all the way up to nearly 28.87. So we should expect something similar this week in terms of volume and price action. Now, if this area of support breaks, there is a really nice area of demand, as I was mentioning earlier, at 28.20, the 28.10, 28.15 price range. Down here, this could be a good entry zone as well. The overall setup looks like this. Let's apply the risk to reward tools. So you could have it right here. This would be nearly a 4-hour trade just from 28.55. Tight stop loss though, up to 2900. If you wanted a wider stop loss below the low, then that makes it 1.7 risk reward trade. If you were to potentially enter down here at the 28.20 price range and targeting 2900, stop loss right below this area of demand, 28.05. This would be a 5-hour trade. And if it goes further, the risk reward increases. But overall, to take this, scale in low positions as price starts forming bullish candles and giving more confirmation, you can increase your risk up to the overall target that we are anticipating here at 2900 through 2920. So that's all I have for gold. Overall, looking very exciting. Like the price action on this chart, and looking just to continue bullish. Gold is bullish, and it does not look like we're stopping yet until we get to the 3,000 price range, as mentioned a few weeks ago. Next, we'll be looking at silver once again here. Silver was also one of the commodities, one of the metals that moved significantly last week. So let's go ahead and adjust our technical analysis here. Right hand side, we'll go to the weekly time frame. We need to adjust our previous week's lows and previous week's high. So we'll move this up to here because this is our previous week's low. Right down here, we hit a low of $30.65 last week. Our previous week's high is up here, which was at $32.63. $32.63. So as you can see, we hit our projection level. We have this area of resistance that price reacted from, but overall we're looking to continue extending higher. Silver's still very bullish. Nothing has changed in terms of the technicals and fundamentals. Same concept, measure low to high. Now what do we see? We have this area right up here, our previous week's high and resistance. Let's adjust the sum so it better lines up with current price action. Let's remove this zone because we don't need this any longer. And we have something right here where price is currently at. Looks like we're going to break below this area of support / demand. And if price does do so, then we have this nice area right here where we previously broke out from at 31.50. 31.50 looks like a good opportunity to enter a buy position. 31.60, 31.50. We'll set an alert at 31.50. But as you can see, there's a very clear range, very clear zone right here. An area that price may react from. This could be seen as a fair value gap almost. Just where it is, it looks a bit interesting. Let's zoom out some to the 12-hour on the left-hand side. Yeah, previous resistance right here could be considered fair value gap where the zone is. But this may react or be tested as support now. So from 31.60 down to 31.40 could be a potential buy zone. And looking to extend further up to the projection that we saw last week, up to 33.50. Short-term target for the week would be $33. So 33 to 33.50 is in sights for this upcoming week if we are able to find some footing here find some support here and continue higher. So if price does come down to 31.60 with this wider stop loss at, let's just say 30.99, it'd be a 2.3 risk reward trade, still pretty good. If it comes down to 31.50, that'd be over a 3R trade. And if price somehow does not break below this point and just moves bullish, you could buy at $32 if you wanted to. I don't recommend this trade because there's no confirmation or anything yet. And I really believe price is going to test this support level. But this would be a over 3.5 risk reward trade as well, just simply using the same setup. Overall, the risk reward is good. Silver is bullish, and we're still looking to extend up to $33 and $33.50. Potentially up to $34 this week if there's enough volume. But overall, bullish. Just have to wait for where price is going to find support at and then continue on with the bullish trend. That's all I have for silver. Next, we'll be looking at the U.S. indices. First, the NASDAQ, and then U.S. 30 after. So the NASDAQ here had a very interesting week. You saw that we gapped down significantly with lots of volume, lots of bearish volume. Then from there, retraced all the way up to where the price had filled the gap. This particular gap right here where we had that open and push bearish, price had to come in and fill this blank space. After that, it continued up to the previous week's high and we saw bearish rejection here. So let's adjust some of these technicals. We have our previous week's high and previous week's low clearly marked. We have this minor area of support at 21,350. There is an area of demand here. We'll put that on. The fact that we didn't break above the previous week's high is a little concerning. We did close as a bullish candle, so that does give me the thought process that we may still have some bullish momentum left and continue up to make a new all-time high at the 22,300 price range to 22,500 price range and then potentially higher. So let's do the same thing. Fibonacci, low to high. We can see that price may attack or reattempt to push to the previous all-time high. That's our first area of short-term take profit for the week if we continue with this bullish trend. And then beyond that would be the 22,500 price range, which we have been anticipating. If we look at areas where we could potentially take a buy entry from, we have this area of demand as marked off earlier. But there's also something down here which price may just completely wick down to and then react very strongly from, the 21,200 price range. So we'll set an alert here and an alert at the 21,400 price range. The setup is looking like this. If we just target the all-time high, looking at a 3R trade, if it comes down to 21,400 to 300 price range, we take the entry here. Stop loss below this zone. If price wants to wick down and you're able to catch the low price at 21,200 price range, you could put your stop loss below here, extend it further, the target further up to the all-time high. 3.5 risk to reward. If you want a tighter stop loss, it goes up to 4.5 risk to reward. So overall, this is a high risk reward trade. I'm still seeing potential bullish price action, but if we don't break above the previous week's high and see rejection, it's just going to be all over. But I do see price reacting from here, attempting to break the previous week's high, and that will determine if we continue higher or reverse and move bearish towards these areas of support at 20,600 price range and down to 20,000 itself. So we'll have to see, but overall still leaning on the bullish side for the NASDAQ here. Next, we'll be looking at the US 30. US 30, very similar price action. Attempted to break all-time highs. Well, previous week's high, I should say. But we rejected, as you can see, similar price action, gap down, heavy bearish price action, and then ended up filling the gap and rejecting the previous week's high. So we have this area of supply and resistance here. We have our previous week's low marked off. Let's zoom out to the weekly. Now this chart does look concerning. It looks like price is exhausted, that buyers are exhausted. We have this major rejection that the weekly candle just printed. Let's see here. If price were to continue, it would need to either hold this current area we're at, or hold the previous week's low. There is actual potential, though, at this point here that price may try and attempt to retrace to. So on the left-hand side, we're on the 12-hour time frame, and as you can see, just heavy bearish price action. We may get a pullback up to here to retest. If we reject this zone, we'll create a wick on the weekly time frame, and then we may just continue trending lower. Maybe something like that. If price breaks below the previous week's low, there's a lot of room for the downside. We can see 43,500 and then 43,000. It is looking more bearish than bullish currently, but if the previous week's low isn't broken, there's still potential that we could see a wick rejection. It comes down like this, some type of wick rejection, and then continue trending higher. The nasdaq is US 30 is no stranger to doing this. We've seen quite ridiculous price action on this indice sometimes, and this is a major key point. If it breaks, then further downside. If it holds, then the potential for a new all-time high is still there. But this, I'm leaning more towards bearish to start the week, and then depending on how price reacts here, it's going to determine a reversal or a bearish continuation. But definitely leaning towards some more bearish price action to start the week on the US 30. Next, we're going to cover Bitcoin here, and this might be our last pair. I do have Ethereum pulled up, so yeah, I guess I can cover Ethereum real quick too afterwards. All right, Bitcoin. So last week, let's go to the weekly time frame on the right-hand side. Price did end up coming down to the close to the 90,000 price range, but made a strong wick rejection, as you can see, completely flipped and moved bullish. Then the next few days, we had some bearish price action, then very low volume price action here. To me, this is still lining up with our previous week's analysis. This is what I was seeing, but as you can see, Bitcoin is very dramatic and very volatile, so it will go to the extreme ends, even though there's valid technical areas, and then quickly react from them. So if these low volume candles may represent a shift to buyers taking control here. So low volume, we're holding this area. Next move may be something like this, and then a pullback, and then continuation. 115,000, 120,000 price range is still in the books for Bitcoin. It's very clear still. If we are unable to break above, let's see, 100, 100,000, 1,000, 100 to 101,000 price range is an area that needs to be cleared first in order to go higher. If we reject from this point, then there is still clear downside range, as we've been aware of, to exactly 90,000 and then potentially to 70,000. But overall, I do think we're going to get a bullish move out of this. We are seeing some signs that the buyers are stepping back in, and we should see that bullish continuation. I'm going to set an alert at the 100,000 price point and then at the 110,000 price point. But overall, I am anticipating this to continue higher. Similar to how gold and silver are moving, I do believe Bitcoin is going to move similar and just continue breaking its highs. Next and last but not least, we'll be looking at Ethereum. It's been some time since I've analyzed this pair, so let's go back and get a fresh markup on here. So as we can see, price reacted from a major area here, similar to how Bitcoin did. Took some liquidity, had a major reaction, and made a major wick rejection. We have some resistance and supply at 3,400 price range. We'll mark this off like this. As well as the 3,700 price range. Then we have the all-time high right up here where this black zone is. Or not the all-time high. The current high, the all-time high is back here at nearly 5,000. But let's mark that off. There we go. So we have the current high here at $4,109. We have this monthly low with a major rejection from the 2,200 price range. We can see that there is an area of support right here that price is reacting from and may start to continue developing bullish momentum. The right hand side will go to the weekly time frame. Yeah, this is what you'd want to see for a reversal. Major rejection, failure to break below, and a shift in momentum as we're seeing on the left hand side. If we go to the 12-hour on the left hand side, this is showing some good signs. Lower volume bearish candles did not outdo this these bearish candles did not outdo this one bullish candle here, and these are each 12 hours, so 1 day, 2 days, 3 days, 4 days. A total of 4 days a total of 4 days candle volume did not outdo this singular 12-hour bullish candle. As you can see, we have lower volume bearish candles here, and we have some bullish candles forming now. We have a wick rejection here as well. This is signaling to me that this was a sell trap. Sucked some sellers in, making them think it was going to break lower, and quickly rejected. There was also buyers stepping into the market too off of support. Currently, I do think Ethereum may follow Bitcoin as well. We are seeing signs of a shift in momentum and reversal signals due to the wick rejection. If price can find its footing here, then the setup could look like this. There is a downside risk though still, but price just needs to clear the previous week's high, which is this area here, 2,900 price range. If price can break above 2,900, then there is a lot of potential for continued upside for Ethereum. The setup I see looks like this. This would just be a 3-hour trade if you target, or if you enter at 2620 price range and target 3,400. This could be a really good swing trade though. if this is the overall low, and you can just buy and hold all the way up to the current high at the 4,000 price range, and then potentially higher if we break above and attempt the previous all-time high around the 48.50 price range, and then beyond that at 5,600. This will take quite some time to play out, but overall, if this is a shift in momentum and a shift back to a higher time frame bullish trend, then just got to be patient and it should play out. That's all I have for you guys this week. Hope you all enjoy the analysis. I do try to provide my best work here every time, and it gets me ready for the week, helps get you ready for the week, and help develop a process to mark up your charts and analyze areas of interest, areas of supply, areas of demand, and areas of liquidity. A lot of these concepts are pretty simple, at least to me. I've been doing this 7 years. But for some of you, some of these concepts may go a little over your head. But at the end of the day, my approach is really simple, and it's just supply, demand, higher time frame support resistance, and areas of liquidity. The rest is just using the tools out of your utility belt, kind of like Batman. He's got tools for everything, gadgets for everything, and just knowing when to use them and to adapt. There's really no rules in trading. I mean, there are rules, but you'll find it's paradoxical. You can create your own rules as long as you abide by the overall rules. That's kind of how it is. You have to know the rules to be able to break the rules. It's as simple as that. If you haven't already, go ahead and join my free Telegram channel. It is literally free, and I'm sending free signals in there on gold and sometimes the US indices. The link is in the video description. Go ahead and follow me on Instagram, TikTok, and on X. Make sure you are looking up the username that is in the video description, as there are people who do try to impersonate me and try to take my brand and scam people. So, without further ado, I wish you well. Have a great trading week, and see you all next week. Peace.